Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. The theme of the day, or the big story of the day at least, is going to be this speech that the president is giving later today on drug pricing. So I'm sure healthcare will be in focus throughout the day. And what a coincidence, we have a healthcare guest on the show today. His name is Jonathan Wexler. He would join us at 8:15. He is the managing director at LifeSci Advisors. They are a healthcare and biotech investment firm, and they're going to talk about their thoughts on. He's going to talk about their thoughts on that. At 8:15, we are going to be joined at 8:35 by the Reverend Emmanuel Lemelson, founder and president of the Lantern Foundation and Lemelson Capital Management. We have other news to discuss as well, earnings, etc. Whatever you want to talk about in the chat, we'll do that as well. Joel, what's happening in the S&Ps?
We're in the green by 6 points at 27.2475, just as Dennis predicted last night. Pre-market high, just above the high from yesterday, 25 even. Also 26 and a quarter, folks, going all the way back to March 22nd. That was the high back then. That's a big level. We clear that with a gusto, and we're looking at 27.50. Coming back on the downside, your opening print of 27.16 and a quarter stands as your low for the session. Beneath that, not a lot of support, but let's see if we can even take out that pre-market low. Bitcoin, I guess there was some news out of South Korea that knocked it off its $9,000 perch. Bitcoin futures, pretty good volume, 5,000 contracts trading down 5 and a quarter at 85.70. Crude still hanging in that 71 handle, up 2 cents at 71.38. Potential double top looming here at 71.63.89. Gold getting a little bit of a bid today, 13.25.30. That's up 3 sticks. Big level here to clear this 13.26. Could get some continued upside. Silver inching higher, up 6 cents at 16.82. Trying to clear that $17 hurdle. Good morning, Dennis. And I guess Dennis is having one of those days again.
One of those days, and nothing good about this morning, Joel. So, yes, I correctly called the market last night. I thought, it looked like it wanted to rally when we were down 3 handles. We're up 3 handles here now, so we've bounced back quite a bit from the lows. Shows how much, sometimes you call the market correctly, sometimes you make, good calls, and you still, lose money just because stuff doesn't work out. I mean, that happens. One of those mornings where it seems like everything I've had from last night is not good today. One, I'm short Verizon, and it's always ugly when you're short a stock and you come in the next morning and it's upgraded. It's bad luck. I mean, that's what that is. It's going to happen both ways. I've been on a roll. I've been on a 3 or 4 day roll where I had a nice streak here. I was due for a bad day. History shows me I usually make money 4 out of 5 days, and then one day something goes, wrong, or you just have some bad luck. And this appears to be that day because my P&L is not looking pretty right now.
All right, let's just start out with that Verizon upgrade. Who did it
Sure.
and why?
JP Morgan upgrading Verizon to overweight.
Stock popping, 1.59%. I feel like it's a big pop. I am still short it. I did not cover because I feel like it's too high. I was trying to cover earlier on, like in the 6 o'clock handle there, Joel, when I was trading down 47.55. I bid 47.53, goes 47.55, I go 47.60, goes 47.70. That's the way it works. You're just jumping ahead of you, and you're competing with other people who are trying to buy it as well. Going to get covered. It's all the way up here at 48 now. I feel like now it's a little bit too high. 1.5% is probably what it's worth. It's probably fairly valued from what the upgrade is, but I don't know. These things have been eternal dogs. There's some resistance up here. If you look, there's a little double top there, 48.32 from last week.
Yep, nice job on that.
Yeah, I don't feel like buying it up here in the 48s. If it gets down to the mid 47s, it's where I'll probably be trying to cover, but I don't know if it's going to pull back that far.
Okay.
Anyways, this is not one you want to follow me on because I don't want to be short it right now.
Go size at 48.30. Big size. and then it won't even open up over 48, and then you'll walk it down, and I don't think you're going to see the close of 47.20, but that's a big move in Verizon. I know there's there is some stock associated with it. Boom, only 50,000 shares. Think how much it takes to move that thing 77 cents in the regular session, Dennis.
But yeah, you think about that, but the one thing you got to consider is, and I do this all the time, what's it worth? You say it's upgraded this morning, so it's opening up. What's a JP Morgan upgrade worth on a stock like Verizon? I probably would say it's worth about 1.5%. So it's probably 47.90. It's probably where it wants to go. Yeah, that's the first thing you should do before even looking, pre-market volume or anything, because it's early here yet, is look at, what's it worth? And if you figure out, okay, well, it's worth, if you think an upgrade, it depends on the stock too. I mean, JP Morgan upgrades some, stock that nobody follows, could be worth 5-6%. Verizon's thick, like you're, saying, Joel. So that's where I would say it's somewhere between 1% and 2% is probably worth. So 1.5 feels right. I'm just hoping to cover a little bit cheaper.
Okay. Gem 12 wants to know if you bought any more Micron on that little decline.
No, I did not. I should have. The whole purpose, and then, I'm kicking myself here too, is because I said I'd buy some at 60, 50, and 40. And I've had multiple chances to buy it under 50 and I never did. So I sit there with a small 1/3 of my position. I have trouble adding to losers. It's like a cardinal sin, in trading. And I know investing is a different story. And my plan of attack was to add to that. And I didn't. And it's a bad thing. I should have obviously bought it under 50.
All right.
So Micron, I still like the stock. Still long it, but again, only 1/3 of what the position sizing that I wanted. So hoping for another pullback.
All right. Boom. Is the NVDA earnings going to affect Micron today?
Yeah, it's going to. And we're going to get those numbers from Spencer right now. We'll break it down.
NVIDIA reporting yesterday after the bell, Q1 EPS $2.05 versus a $1.45 estimate. Very nice beat there. Sales 3.21 versus $2.89 billion. So another nice beat as well. Q2 sales guidance coming in higher than expected, $3.1 billion versus $2.95 billion. And that right there is your number. On the conference call as well, they also said that their company's supply situation is, quote, easing. Channel prices for GPUs are normalizing. And there we go.
It popped a little bit on the initial report. Again, it just ran too much up in the report. The report's fine. But, when you run up $30, the week prior to the report, it's going to really, really have to blow it away. It did kind of, but in any regard here, I think this was going to go down, at least initially, off the report. That being said, this stock is starting to find some support. Joel's going to talk about this after hours in pre-market action. And I am predicting here, I believe this stock could actually go green here today. So we're down $6. I think NVIDIA could get it all back. It's not a bold prediction, but it's a feeling that I think it could go green. Joel, talk about the after hours.
Lunch.
You want to bet lunch?
Yep.
You got to give me odds on that. I mean, the thing's $6 off green.
2 to 1.
I gotta need to get 3 to 1 from you.
Oh.
2 to 1's not enough. You got to give me. It's $6 out of there right now. That's a long ways for it to climb. Plus, there's all those people who bought yesterday on the good, thinking the number's gonna be good, or bought it after hours after the number was good. All those people are stuck. So they got to battle through those people. That's why I need 3 to 1 odds on it.
2.5.
2.5. We can't have half a lunch. How do you have half a lunch, Spencer? We need the judge's ruling on this. You can't have half a lunch.
Half a lunch is a drink.
That's it. All right.
We all have not a bet on the show in like 6 months.
I'll give you 3 to 1.
3 to 1. We got to bet. We got to bet. So it's got to go. Just go green, right?
Yeah.
Okay, so it's just got to go green. So it needs to get back $6. So I think it can do it. I like the 3 to 1 odds. Joel, talk about the after hours.
I just want to wait. I got to put my order in for 50,000 at 260.12.
Just to block it.
Yeah.
About 100,000 share order there.
Big dip. Took you right to Thursday's low. So it's all about 250 in this thing. That's your 2-day low. So if it takes out 250. I'm sure there's going to be a lot of profit taking there. Above 2, if it holds 250, yeah, you got some room to rally. Long way to get to the close. And I just think people are saying, man, I should have got out ahead of the report after that major run, are going to say, oh, if this goes up, I'm going to get out. So that's my scenario. That's just a lot of profits on the table. I mean, this thing was 210.30 back in April, and here you are. So I think you're going to see profit taking here, even though it's down $6. Any kind of pop's going to be sold.
I think it could go to. So obviously we made the bet here, so we'll see how that works out. Hoping for 260.14, so I can cash in on another lunch. Free lunches from Joel. Spencer, I'll even take you to lunch on this one. And maybe the other person I should take to lunch is Scott from my Twitter, because Scott gave me this stock here. And Scott, if you're listening, I know you do listen to the show every once in a while. Props to you on the IQ call, because he was talking about IQ and asking me about it. A couple of weeks ago, we talked about it on the show. The stock was trading around $18. And Scott was talking about this stock, and I had heard of it, but I hadn't really followed the story. And then we did a little segment on the Netflix of China, and I threw some of my investment portfolio there around 18. A couple days later, it wasn't looking pretty. It went down under 16, obviously, and got lower. But you know what kickstarted this 4 days ago? Remember? What kickstarted this rally here in IQ?
No.
Spencer, you should know. You're the news guy. I know what did. 4 days ago, go to your trusty Benzinga Pro and look up what happened 4 days ago in IQ.
They announced a deal with Film Nation.
Well, no, that was afterwards. The deals are helping, but what really kickstarted it?
Goldman Sachs.
Somebody in the chat.
Goldman Sachs. Here we go. Initiates coverage with a buy rating.
Look at Des smiling.
And
Goldman Sachs comes through again in the clutch, and they helped me out here because obviously I own the stock, and they put the buy rating on there, and it went from 16 to 17 that day. It really has never looked back. And now it's in full rocket ship mode. So I don't even know what to do. I'm never in rocket ships. I'm always in these boring stocks that go up like 5 points a year, not 5 points in 2 days. So there are a lot of me that says, sell. Scott, tell me what to do. Maybe he'll tweet at me because Scott told me when to buy. Scott, you got to tell me when to sell. So I'm in the IQ. I was going for a little bit longer term. It wasn't a trade, though. So I guess I got to stick with it. But nice job, Scotty.
Good volume here. Trading up at 21.52. That's improving on yesterday's close. Added $2 yesterday, adding another $1 here. It's all about 23.15, Dennis. That was yesterday's high and the all-time high. So if you're looking for a target, but thanks, Scott. We appreciate the feedback, and also from everybody in the chat. We've been getting some great trading ideas. But any more earnings, Scott?
Yeah, let's do one real quickly before we go to our first guest. Let's do we'll do DBOX because they had their first earnings report yesterday after the bell. Q1 EPS of 8 cents versus a 4-cent estimate. Sales of $316 versus $309 million. So they beat on both the numbers there. Did DBX, and I don't think the stock is
What a weird chart.
It's just kind of range bound since the IPO. It hasn't really decided. Some people think it's going up. Some people it's going down. Who did the big downgrade there a little while ago? And that's when it went from like 31 down to like $28. I'm talking about back on the 16th. Well, this is Namira Instant. Then they put like a $17 price target on it or something. Do you remember that one, Spencer? Spencer, I don't. He's good with that pro, and then he'll have that information. But about 3 weeks ago, I remember it caught a downgrade there to sell with like a $17 or $19 price target. Somebody really beat up on it, and then the stock went out of favor for 4 or 5 days. Obviously, it's come back. It's back up here. It's reported here now. I don't know what to say. I mean, you're still 29 to 32. You're still kind of within the trading range. I think eventually if the market starts to break out overall, I think stocks like this will just climb with it, because these are, these newer companies, even though if you don't even look at valuation or anything or individual company, the whole broad market could bring a stock like this up. So if you think you're going in full breakout mode, then maybe this is a stock you want to buy on the pullback. But I don't know. I'm torn on this one.
Yeah, and it wasn't a mirror. Good memory, Dennis.
What was the price target?
Oh, I didn't look that closely.
Pre-market low, real quickly here. Pre-market low stands at 30.27, and I like that level because your 2-day low is 30.14. So hold it.
Are you buying the pullback?
If I was short, I'd be covering it there. I mean, I don't even know what the company is. So I know. Do you guys use DBOX?
We use it at Benzinga. We use it at Benzinga for like 4 years, man. We used to use it. We don't use it anymore.
I use it too.
Yeah, because I use the
Dropbox. It's pretty good. Like you can have all your friends or your buddies that are accessing your computer.
All right.
Drop the big files in there. They can go get access to it.
Oh,
pretty
look
good.
at you, Mr. Techie over there.
All right,
I got
8:15.
the Dropbox.
8:15. We're gonna take a quick break and grab our first guest of the day, Jonathan Wexler, Managing Director at LifeSci Advisors. We'll be right back. All right, welcome back, everyone. PreMarket Prep. We're going to call Jonathan back in about a half hour or so. So we got some time between now and then. And let's go right into a question from the chat. Ticker thrown out there by Jazz. Semantic SYMC. Oh, man, my
Loser of the day.
my browser just a little froze up on me, so I can't quite get the number.
This is the loser of the day.
Chart.
It's down 27% here right now. Disappointing report, but there was something else in the report, Spencer, that is spooking investors. I believe something about an investigation. Do you have that headline there? From your
my browser just started acting a little bit funky on me. Let me see if I can get it real quickly.
I can probably grab it too.
Benzingos Pro.
I didn't have it up.
Accounting issues.
Here we go.
Yeah, we never want to hear accounting issues, so let's go check it out.
Okay, yeah, the internal account. Okay, so I'll get the number. I got the number for you.
Yeah.
46 cents versus 39 cents. Sales 1.23 versus 1.19 billion dollars. Q2 EPS coming in light. Q2 sales guidance coming in light. Fiscal year EPS guidance coming in line. Fiscal year sales guidance coming in light. And yeah, you mentioned the accounting issues is what they
that's what it was. Accounting issues. You never want to hear accounting issues. So that's why stock getting extra killed here today. I mean, sometimes these things, when there's blood in the water, this is when you throw in your investment portfolio and forget about it. I can't argue with you if you're doing that at 21 here, but I also know that usually these things don't work themselves out in one day. So it's a lot of times if you sit back and just wait, you can sometimes get it cheaper. I usually like to wait until the stock stops going down, at least initially. And we haven't even seen that yet. In the pre-market, it continues to leak here. Thoughts, Joel? SYMC gets annihilated.
All right. Well, like Dennis said, the one word you don't want to hear on Wall Street is accounting issues. And
Kramer always says accounting issues equals sell. Right. And you know what? That's actually pretty good Kramer advice.
And but they did release a report here. It does look like the Q4 report because that's the 10th, right? 46 versus 39. But the accounting issues are trumping everything here. I'll just on the chart pattern here. I mean, getting killed down nearly $8. Also, you got a triple downgrade. Boom. You're looking at 2038. You haven't reached that yet. That was your low back in August of 2016, pre-market low, just hanging at the lows of the session. So no bounce yet. 2123 is the low. I don't know about cover going long at that 2030, 2040, 2050, but man, if I did happen to have this short, you're not going to get any worse news than this to potentially cover a short. Whistleblower on the accounting. I just want to tell folks, I don't know, when was it when they raided Caterpillar's office because of accounting issues? Remember that?
Yeah, that was a year and a half ago, and that was a great buying opportunity. Holy moly. Yeah.
Sometimes if you get the good companies and, the Facebook, obviously that was a buying opportunity. Sometimes you're just buying when everybody's nervous out there. It sometimes is a good idea. Now, Symantec is not widely followed. Caterpillar and Facebook are.
Yep.
So it's a little bit different story. When you get these widely followed, loved stocks, they pull back significantly. It is an opportunity often. Sometimes the smaller companies don't follow suit with that. So just caution. But, like I said, if you're buying at 21.40, again, at $8 cheaper than yesterday. And if you got a time horizon of, let's say, 5 years, I'm not going to argue with you.
If I was short, I'd be buying it. If I want to go long, I'd be waiting. That's my final.
I would wait too, just to see, let this, the dust settle here. Think about Facebook after day 1, too, when they had, obviously not accounting, but, when they had the data breach and the data scandal there, it went down $10, like 170 that day. And it literally came down for another 5 days, down to 150, and gave you multiple chances. Usually these things will give you a couple shots there, and start to form some type of bottom, as opposed to just bounce right back and you never get a shot again. Usually they give you another shot. So what I'm saying, it probably pays to wait here to see, where that bottom is going to form. A21. So we got Yelpster, Spencer. Let's move over to the Yelpster because it reported last night. I remember Yelp's report last time, and I'm having a little bit of, I think they got murdered last time they reported. And then if you look at it 3 months later, it's not only got all the losses back, it actually is making new highs. So at least new highs on the move. So obviously not all-time highs. Back in 2014, it's at $100, but new highs on the move. So it seems like when the Yelpster gets killed, it is a buying opportunity. Yelpster's getting killed here today. What are the numbers?
I don't understand how this company is still in business because Google does the exact same thing that they do.
What is it that they do? They're online yellow pages? Is that what it is? What is it?
No, it's a way for you to look at reviews for restaurants and businesses.
It's
just
Joel,
and you can just search dinner and return a whole list of dinner restaurants near your location, and you can look at how they're rated and pick one. And Google does the exact same thing. Anyway, Q1 EPS 3-cent loss that beat by a penny. Sales $223 versus $220 million. So okay, they beat, but not by a whole lot there. The fiscal year sales guidance came in line. I don't know. I don't know. I don't get Google.
I agree. This is not going in my investment portfolio because anything that Google does too, and I'll agree. I'll just listen to Spencer's words of wisdom here on this one and say that I'm out on Yelpster too from an investment standpoint. From a trading standpoint, time this thing pulls back, it seems to find love again. So it's still not hated by the street here, but caution to the buyer because it did get the beats last time pretty hard on the earnings report.
Read into resistance here in a common area back at the $48 level. We found resistance there late last year, trading down 250 in the pre-market and not looking like it wants to go up at all, not as we speak. 45 even is your pre-market low. I'm going to be focusing on your 5-day low, 5 and 6, 7, 8-day low within a 40-cent range. So I'll call 44.50 your next area of support, and then 44 even. So we'll see, but no bounce yet in Yelp.
Also reporting earnings there last night. Let's go to Redfin, RDFN, and that stock is trading down in the pre-market there. Details.
Q1 EPS, a 44-cent loss. That is in line with the estimate. Sales $79.89 million versus a $77 million estimate. So they beat that number as well. Q2 sales looking in line, actually higher than the estimate. The estimate was $134 million. They actually said it'll be $134 to $139 million. So likely higher on the Q2 sales.
So this is just where you go, a site where you go find a home and list your homes. What exactly is it's real estate website?
Yep. Online.
Where are we back in? Let's just stop here for a second. Are we going back to 1999 with some of these companies? They all are losing money. Like the Redfin and a lot of these other little tech companies. Not talking the bigger ones, but it seems like they come up with a website. It's pretty good and it's pretty functional and they use it. And all of a sudden, they're worth billions of dollars. And, a lot of these websites are probably maybe this is, they got a nice system here, but what's stopping somebody else from making something better here. I don't know. I'm just saying, all these internet companies here again. We had the internet bubble, went through 1999, 2000. Anybody that came up with any website, back in 1999 was worth $1 billion. Now you get all these companies, and they're all worth a significant amount of money. And yeah, they're pretty sweet websites. Maybe a lot of people use them, but none of these companies are making money.
Should we have started pre-market prep in 1999?
That would have been interesting. Going through the tech crash. That was crazy though. If you didn't live, didn't trade through 1999, 2000, that is a whole different experience. I mean, it was one thing. The financial crisis was pretty ugly too. And I mean, very ugly, but that tech bubble crash, it just got crazy. I mean, stocks were going up, doubling in a day all over the place. Remember that guy, Todd, that we had trading up right? Remember Todd? And he'd sit there and he would just trade whatever the hot internet stock was of the day. And he'd buy it in the morning and he'd get down 5 or 10% in it. He's like, well, it's going to come back. And it did. And it would come all the way back up. By the afternoon, he'd be up 20% of the thing. The thing's having 30% intraday swings on no news. This was just normalized trading. He's like, yeah, you buy these things on the pullbacks and they all come back. And I was new to trading then. I was like, man, this Todd guy is awesome. He knows what the hell he's doing. He just buys every pullback every time. He holds on. If it goes 10, 15% against me, he just holds on. It comes all the way back and he makes money. Every day he was making money until 2001 when they all blew up. But wow, man, that was just different times back then, the internet bubble.
I'm going to look him up. I'm going to try and find him.
It'd be interesting to see how he's doing now. A lot of those traders,
you can look him up in the phone book or Redfin or something.
We had so many different, traders in that Bright office. We're talking the Bright trading office in Detroit, and there was different styles. It was the newsletter guy. Who was the guy that read all these newsletter every mornings, and he'd buy these little penny stocks, and man, he'd be just making money rolling over too. I mean, and then we had, remember Radar? Remember that guy? Radar, and he struggled. He was struggling. He was sitting beside me, and he struggled. And a lot of interesting characters you get, trading.
Why do you call him Radar?
Why was his name Radar? I don't know. Maybe because he had, good instincts. But although he never seemed to make money.
I don't know. I don't remember that. I don't remember.
You don't remember Radar? He sat right beside me when I first started. He'd be in a stock, and then and then he'd jump on, the bandwagon, and then would roll the other way on him, and he'd be getting killed. And he struggled. He really struggled. He was a nice guy, but he struggled.
Okay, all right. Redfin's a Sean Udall favorite here, and
really,
yeah, and it's going to try and replace traditional real estate. Real estate brokers can make some pretty good commission, and on some deals. And so what Redfin's trying to do is it's trying to be the internet of real estate. It's had its ups and downs, but I think last time I talked to him, I think he liked this one. So not exactly sure, but I like $21 if it gets down there. You had 4 or 5 lows there in March. You dipped under in April or early May at 2076, but this 2076, 21, that's a buy zone for me. If I was short, it would definitely be a buy zone. And I'm also, I'd consider it on the long side at that area.
Also reporting just from last night there, I want to go to XONE, which is one of your 3D printing stocks there. Some of those 3D printing stocks really blasted off, and 3D Systems is still going up. And I almost look at that 3D chart here now, and I'm like, come on. It's getting a little bit silly here. I'm thinking SSYS is the same chart. They've been going straight up for 3 days. I mean, what a wicked rally in some of these things. Imagine being short that. And you're like, well, it went up $1. It's, it's got to come back in. And then it goes up the next $1. And it was like, it's up 20% in 2 days. It's got to come back in. It goes up again yesterday. I mean, these things are crazy. It's coming to a wall of resistance of 13. I have this in my speculative portfolio. I think I'm going to dump it today, honestly. I shouldn't say that. My stock price going down here now because I said that, but just kidding. We don't have that much influence. But in any regard here, 3D, I think I'm probably going to get out of it today. It's too much too fast, isn't it? Isn't it, Joel?
Yeah, but then, you can say that, and I don't know. I mean, you've seen stuff. I mean, this is only 1, 2, 3, 4, 5-day rally. I mean, how many times?
But it's a 30% rally in 3 days. Is there news even on that?
We went over this yesterday, Dennis. It's a short squeeze.
Short squeeze. Squeeze them. Squeeze them.
Yeah, they had a bad report. People sold it off, held the close, made a double bottom, and turned around. Let's see here. If you want to get giddy here, 1310 and 1370 are a couple levels. What did you hit yesterday?
Wait, what stock are we looking at right now?
We're everywhere. We're all over the place.
I don't
We're
even
looking
know
at Triple D.
How do you not
Triple
know
D?
Triple D. You said XONE. Okay, that's what I.
No, we started, but we went on a tangent. Follow along, Spencer.
Sorry. Okay.
We go on our tangents.
Okay.
And I took it because I own Triple D, so I took it to my stock. It's our show. We're taking it to our stocks.
Okay, keep going. Sorry to interrupt.
We're doing Triple D, and now we're coming to XONE.
Well, I just want to get the right chart.
It's all about $13. $12.92 was yesterday's high. $13.10 was
selling it today.
Where did
Getting out of Triple D today.
Where'd you buy it?
I don't even like 11 something, I think. But I took heat. I bought it like for a while, and then it's all the way back up, and I'm greening it now here. That's the old loss aversion trick coming back in. It's too much, too fast. I'm selling today. XONE. Talk about those earnings.
Earnings yesterday after the bell, a Q1 EPS loss of 40 cents versus a 33-cent loss. Estimate sales 11.9 versus $12.35 million, so a slight miss. They did, however, reaffirm their previously given fiscal year sales growth. And let me see if I can find that number for you in a second.
XONE, boom, boom, boom.
20 to 25% adjusted EBITDA growth for the year is what they've previously given.
Boom, breaking that $7 level. Bad news there.
Very light volume,
though. I see what happened. I mean, 7 was your last 4 lows. I don't know if you're going to get rid of the buyer there, but you are looking into your 5-day low here is 672. So let's see if that finds some support. Coming back on the upside, 719. That was your close on Thursday, 702. I don't know. I don't like this stock. Remember ONVO? Remember that stock?
Yeah, where's that thing?
That's
that were printing organs, weren't they?
Yeah. Yep.
Oh, it's come down a lot.
Yeah.
It was like $10 at one time. Now it's $1. Yeah. A lot of these little 3D printing stocks, you know, the player in 3D printing, I totally believe in 3D printing. I tell you, you know, I've talked about my buddy Pete Canis over there at Barron's Jewelries multiple times. He's, you know, they do all the rings, and they did the rings for the Cleveland Cavaliers. They 3D print every single ring before they make them. They do them on the molds. And they've got some slick systems, you know, but they had the Stratasys system, and now he's a big believer of the 3D system. But I still think the big player in 3D printing is going to be Hewlett Packard. I think it is. And, you know, they're getting into it. I think they got the cash. They got the, you know, the money to, you know, get through it. I think HPQ is going to be your 3D printing player. And that's why I like HPQ as a long-term play still. Not only that, you get the dividend too. So you can think, oh, old school printers, what the hell, HPQ. But if you start thinking about the future of 3D printing, I think HPQ will be your player. They're going to be the player. So, you know, yes, 3D, SSYS are the players now. But I think HPQ is eventually the player in the industry, and that's concerning for 3D. Maybe 3D gets scooped. That's possible, but I don't know if Hewlett Packard needs to do that. So that's why I think HPQ, I think you're fighting a big gun there. I think they're going to be the player in the industry.
Yeah, Voxel Jet is another one that hit an all-time high of $70.
And it's dead money. All these things have lost a lot of money in the last few years, or have, you know, not made you money as if you've been an investor. So every time they've rallied, those have been, you know, rallies to sell.
3D food, wasn't that one place gonna print it like a 3D apple or something?
You made that up in your sleep. No, but you can't eat a 3D apple.
I don't think.
What are you going to go? It's going to be made out of wax. You know how bad that's going to taste? Come on, Joel. You can't print apples. You dream this stuff up in your sleep, and you talk about it all the time.
We live in a world of fake meat and 3D printed.
You're going to eat a wax apple?
All right.
No, there's something. I'm going to find it.
And he's going to mail it to you. All right, 8:34. We're going to take a real break this time, and we're going to actually grab the Reverend Emmanuel Lemelson. He is the founder, president of Lemelson Capital Management and the Lantern Foundation. So we'll be right back in a moment with the Reverend.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we are joined on the line by Reverend Emmanuel Lemelson, founder and president of the Lantern Foundation. Reverend, how you doing on this Friday morning?
Thank God, Joel. It's a beautiful sunny day up here in Vermont. Weather is just beautiful. Happy to join you on your show as always.
And as always, I ask you why you like Benzinga, why you like coming on our show, and you always give some nice compliments. So I'll do it again.
Yeah, absolutely, Joel. You know, you guys are honest. You're dynamic. You're to the point. You're interested in reporting the news in an unbiased way. And you know, I think all the major financial news media outlets should be worried because you got a good thing going. I think your show is tremendous, and I'm always humbled and grateful to be on the show.
So you're going long Benzinga, and you're going short Bloomberg, Reuters, Dow Jones. Is that what you're doing?
I've been trying to buy a stake in Benzinga forever. I mean, Jason doesn't get back to me. I said I was so nice in my last email. I said, Jason, I hope you consider us in your next capital raise. But anyways,
I'll pass the message.
Maybe next time he will.
Okay, Reverend. I am going to
start. If I could short Bloomberg and Wall Street Journal, I would in a heartbeat.
Okay. All right. So I do have a tough, you asked if I was going to be easy on you or rough on you. And I'm going to be rough on you because TT Mac, TT Mac from the chat remembers when we were talking about GEOS. And you said that I asked if I should put my mom and my grandma into it. And you said
no. TT Mac doesn't remember accurately. You said your mother-in-law, not your mother.
Okay.
And you know what I forgot to ask you last time? Depends on how you feel about your mother-in-law.
I love her, and she is so mad at me now. She owns like $250,000 of this GEOS, and she's got a stop in there, and she wants to know what's going on. So I know.
Oh, you mean a stop loss order?
Yes.
Oh, take that out. Look, that well, okay, I'm not supposed to give investment advice.
Okay, go ahead.
But listen, Joel, I'm close to 1.3 million shares for our fund. That thing's going to go through the roof. I have no doubt. I mean, patience is a virtue, but it really comes down to a few things. The company's trading at about 40% below tangible book. I think the tangible book they're reporting is already dramatically lower than it actually is. I think real tangible book is probably closer to $20 a share in my appraisal. And they are getting large orders. On those last earnings call, it's a little bit cryptic, but they announced they had a rental contract for 9,000 OBX units. I estimate that to be at least $35 to $40 million. And that's without any extensions on the contract. They just reported only a 35-cent EPS loss, but if you take out non-cash items, they actually made about $600,000 to $700,000. Now, I also believe they're going to get very large contracts from Petrobras. Probably this calendar year, I'm guessing. I'm not totally sure on that. But I think those contracts could be worth north of $200 million. You're talking about a company with a market cap of only $130 million. Also, they're clearly going to get more OBX rental contracts. There's no doubt in my mind. If you look at what happened in Q4 of 2017, they were talking about putting $21 million into capital equipment. If you compare that carefully to this most recent conference call, they're talking about $26 million. So their movements from existing inventory into the rental fleet have gone up by about 30+%. The writing is on the wall. Look what happens with these other small E&P names like Ion, Geophysical, or Dawson, or even the industry at large. Look at Transocean or Schlumberger, Halliburton. They're all at or near 52-week highs. I think this stock is artificially depressed right now. Probably institutional holders are selling. They're not the sharpest tools in the kit. When those guys get out of the way, and once people realize that there's most likely a positive EPS figure this quarter, and that's only going to grow, I think that thing could reset, 5 to 10-fold. I really do. And that's what happened with Ion. The stock went up like 6 or 7-fold in a period of 6 months. And that company, I don't think is nearly as strong financially as Geospace. So patience is a virtue, Joe. I'd say sit on it. I am. In fact, I'm still trying to buy more. And I think we'll be proven right. And when we are, it's going to be in a huge sort of way.
And you've taken a little bit of an activist role with the company. How do you do that? Do you call them up, and send them a letter, and did you take your daughter down there to visit a year ago or so?
My daughter? Yeah, she joined me on the trip to Hibbett Sports, actually.
Oh,
and we went down and met with the CEO and the CFO, and that was a great meeting. They were fantastic. Those guys are so sharp. And they were very, very courteous to my daughter. And, she wants to be a veterinarian. And I'm saying, no, hedge fund manager. She's a veterinarian. I'm saying hedge fund manager. So I hope I prevail in the end. She's really smart. She enjoyed the trip. She came home. She put her whole portfolio in Hibbett Sports. I think it's like $400.
Oh, nice.
And she's done very well.
Yeah,
she's tripled her money.
Okay.
But I did bring my son down to meet with the CEO of Geospace.
Okay.
And he did get a private tour of the facility. They've got they got almost 400,000 square feet just outside of Houston, state-of-the-art manufacturing facility. I'm a little unhappy with the management team. It's true. But, if you have to choose between dynamic, rock star CEO and good economics, I would choose good economics.
Do you follow,
you don't need Elon Musk to run the company.
Do you follow ESV at all? That's in the same sector. TT Back wants to know about it. That's had a nice move from 550 to 673. Are you familiar with that stock at all?
No, I'm sorry to say I'm not.
Okay. All right. Let's move on. We're talking about an oil stock, but let's just talk overall oil here. 71.43, trading up 7 cents on the session. Just some wicked volatility with the, when you had the Trump-Iran thing, trading at levels that you have not seen since July of 2015. Give us your outlooks on oil.
Well, I was saying for the last couple of years that oil has to rebound. I mean, it sounds maybe crazy now, but people were saying a couple of years ago that oil's done, right? Everyone's going to be driving a Tesla Model 3 in 6 months and have a windmill in their backyard. And if you look back at our annual reports on LemelsonCapital.com, they're all publicly available. If you look at some of the things we were writing, we're saying, there's no actual data to support that thesis. And so when oil was trading at, like $30 a barrel, I was basically saying you can't take $1 trillion out of CapEx. I mean, it will change eventually. Hydrocarbons will go away, but it's not like sperm whale oil, a century ago, where like the whole economy of Nantucket collapses overnight, right? And New Bedford, Massachusetts. There's a massive multi-trillion-dollar infrastructure globally that depends on hydrocarbons. So, I've always been in the camp that says it's capital intensive. So it's not like Google. I mean, to poke holes in the ground and to find out where to poke them to get this stuff out of the ground is really capital intensive. So you didn't have to be a rocket scientist to figure out that if CapEx was cut too deep, and it certainly was over the last 3 years, you were probably going to have a supply deficit, barring geopolitical events. Now, I think the writing's been on the wall with Venezuela and Iran for a very long time. And I think this year we could see supply deficits of as much as 1.5 million barrels a day. And without a massive increase in exploration and production spending, that could balloon to 5 or 6 million barrels a day easily in the next 2 years, maybe less. Because, the conventional reservoirs, they deplete by about 6% per annum. So if you're talking about, demand of about 100 million barrels a day globally, you're losing every year 6 million barrels a day. So the supply ratios, they're at historic lows. I mean, reserve replacement ratios are like 11%, which is like unheard of. So there's going to be a massive crisis if we don't increase spending in E&P. I mean, it's really just second grade math. It has to be done. And that once that moves downstream, especially for some of these small cap companies like Geospace, I think, they're going to be windfall profits for shareholders.
Reverend Dennis Dick here. I just want to ask you about Domino's Pizza.
Hey,
AG Penner wants to know if you still like it at this level. AG Pennypacker, actually, from the chat, wants to know about DP Zebra.
Are you short?
Yeah, absolutely.
Oh, you were short.
Yeah.
I forgot.
I was short Domino's. Yeah. Yeah.
Did you cover it?
We covered it last year at a loss initially, actually, but not because we wanted to cover it at a loss. We just, to free up additional liquidity in our portfolio, we shorted it a second time at a profit, and we certainly are going to short it again. It's
okay,
just
so
unsustainable. Completely unsustainable. I love it at 250 as a short, because the bottom line is you cannot borrow money to increase a shareholder deficit. And that's all that's happening here, almost dollar for dollar. So for every dollar they borrow, they basically increase their shareholder deficit. So the point of a business, right, whether it's making pizzas or selling cars, whatever it may be, is to earn a profit and a return for the investors and the owners of the company. They're actually extracting wealth from their owners, and they're doing it using leverage. So that's a formula for disaster.
What is your thoughts here?
But I mean, there's a secular change in the industry. I mean, you look at these there's all sorts of gourmet pizza chains now emerging, which have a better product, I think.
What are your thoughts here overall? I mean, you sit there and you crunch the numbers and you look at balance sheets, and I mean, and it's frustrating at times because this market seems to just be so driven by headlines. And in the short term, people don't seem to care about crunching the numbers there. And, it can take a long time for some of these trades, for yourself even to work out. It seems like in the long run, if you hold long enough, that it still matters, and earnings does drive price in the long run. But the short run is so frustrating. And I'm a chartered financial analyst, and, I sit there and sometimes crunch numbers on stuff too. And you're looking like, man, there's good value in a company like this. It makes sense. And the stock will keep going down because it's out of favor. What are your thoughts here? And, do you just ride through these tough times sometimes?
Yeah, you got to know yourself, Dennis. Seriously. I mean, you can't overlook the fact that we're in the great bull markets of history. What's happened in the last 10 years is not normal. I mean, there's a whole generation of people in the marketplace that only really know a rising market. And they think maybe it's different this time, right? I mean, the old adage, of course, it's not different. The history of U.S. Financial markets is that they move in cycles. So I personally think what we're seeing is the long-term reflexive inflation, devaluing the dollar that took place during all these years of quantitative easing. And I've said over the years, we don't really know the long-term effects on inflation, but we knew that asset prices were going to rise, and they're still rising, right? And there's all this euphoria around having this a president who's really a shrewd businessman, and that's a good thing. I mean, I think it's great that we have a president who's a shrewd businessman, but the market's really, people forget it can also go down, and it will go down. It's guaranteed to go down, and that will come as a rude awakening for a lot of people. And that true value investors, and I say true value investors, because really guys who are wired, I'm not talking about education, I'm talking about the way their brain is wired. To find a dollar bill for 50 cents to be greatly important, because you protect your principal, and you're probably getting a better average rate of return on your capital. They're exceedingly rare. Almost everyone else in the marketplace is a speculator. In other words, they think that they know where prices are going to go tomorrow, but actually nobody really knows. All we know is that people feel comfortable in a group. When the group keeps moving in that direction and prices going up and up, it becomes euphoric. And people forget what a downturn looks like and feels like.
Reverend, we're up against the clock here, but I just wanted to touch on. No, that's okay. No, Dennis asked these little complicated macro questions. We just want stock picks, and we want to know. You said there's still some opportunity in the retail sector, and you, Angie. I don't know if Angie's in the chat today. She hit a home run with your Hibbert Sports. So give us your picks here in the retail sector.
Well, I'm buying Bed Bath & Beyond for our fund, and I'm buying it as aggressively as I can. I think it's very much like Hibbert Sports, actually. Not quite as good as Hibbert Sports because they have some debt, but in some ways better than Hibbert Sports. It's a larger company, and probably longer. I don't know if it's long. It's not actually a longer history, but it's a bigger and probably a little bit better run company. Although the Hibbert Sports management team is great, but the media and the analysts have all beat it up. It's trading below book value. Revenues have grown consistently every year. So if people are thinking they're going to be a victim of Amazon, probably not. I mean, they might even be a takeout target at these prices. But I personally, if I was forced to bet, I'd bet the stock price could double maybe in 18 months. I mean, they've had declining EPS, but that's normal. I mean, it's happened before in the history of the company. There are cycles to business. They've got a massive share buyback program. They're returning capital and dividends, which they're increasing, which is great. If you look at their EBITDA, they're throwing off almost $900 million in EBITDA, and they've got an enterprise value of $2.8 billion. So really, EBITDA, use that as a proxy for free cash flow, would cover the enterprise value in less than 3 years. That's pretty insane. So I think there's a tremendous margin of safety. I think if you include tangible book in there, you probably have a 70% margin of safety. I think the stock is worth much, much more, maybe like $50 or $60 a share. But once that EPS figure gets back to a growth, and I don't see any reason why it wouldn't. Probably it's going to take 18 months. The price is going to reset. But you got to be a little bit patient.
All right, Reverend Emmanuel Lemelson has been on with us. He is the founder and president of the Lantern Foundation and Lemelson Capital Management. Reverend, thank you so much for the time, as always.
It was really great joining you guys. Keep up the great work.
All right.
Thank you, Reverend.
We're going to take a quick break and grab Jonathan Wexler from LifeSci Capital. We'll be right back. Welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, Dennis Dick on now with Jonathan Wexler. He is a managing director at LifeSci Advisors. John, how's it going today?
Doing well, very well. Yourself?
Doing pretty well. It's a good day to have you on. We have this scheduled speech for 2 p.m. by the president, where he is reportedly going to, talk about or push a plan to have sweeping reform as far as U.S. drug prices are concerned. Are you watching that this morning, and what is your expectation?
I am. I'm watching it very well. As it pertains to my industry, we specialize in LifeSci and Biotech specifically. So whereas the entire healthcare umbrella has a lot of different moving parts, for biotech companies, they're really focused on getting their drugs approved for the most part. And in that specific area, whatever he's going to be doing probably won't have a big impact. The reason why is, number one, there's really not much that people expect him to do. But number two, these companies are so far away from profitability and selling their products that it probably won't be that meaningful.
So you're more concerned, to repeat that, with getting approval in the first place. So is there any big catalyst that you're watching, from a macro standpoint, from the FDA or anything that is impacting that landscape at all?
Yeah, that's a great question. So the FDA, a couple of years ago, when Scott Gottlieb came in a year and a half ago, said that they were going to try to reform the system insofar as decreasing the amount of time that it'll take for a drug to get approved, as well as making the pathway a lot easier. Now, in many respects, they've done things like that. They've tried to remove regulations. They've tried to speed the process up. But as an overarching in an overarching look, there hasn't really been much done. There hasn't been a shrinking of timelines. There hasn't been a decrease in fees. There haven't been more drugs approved than usual. All the drugs that have been approved due to efficacy, really, and safety, rather than the fact that they're kind of being sped up. So we haven't seen very much at all. What we have seen is a very, very large amount of money going into the private side of biotech, as well as a numerous amount of IPOs recently of companies trying to go public. We've seen a lot of money coming back into the space.
So wait, what is the fact that you've seen money going private? What does that tell you?
So what it tells me is that people don't really want to invest in the large caps anymore, right? Gilead, Celgene, Amgen, Regeneron, Biogen, collectively they're trading right now at about an 11 to 12x multiple on a 1 year out basis versus the S&P, which is over 20, versus large cap healthcare, which is around 20. So large cap biotech is trading at a severe discount. Why? Because these companies are old for the most part and stale. I don't mean to generalize, but they need to start acquiring new companies. They're not building out their pipelines. They're not developing things in-house. They're licensing them out. And so we see a lot of money going into the private side and small cap biotech space because these companies are going to need to be bought for the larger companies to sustain their business models.
And what about the other thing you just said about IPOs, the types of companies IPOing and the street's reaction to those? What have you observed there?
It's very interesting when you ask that question because there have been many IPOs of gene therapy companies this year. There's been a lot of focus on CRISPR technology. So the companies that are going to gene editing have really hit the radar screens of a lot of, a larger base of retail investors. But the gene therapy companies that are coming public, they don't really have any data, right? They haven't been in humans per se. They're going into their phase 1s in humans. And so we've seen them act extremely well. There was a company that IPO'd earlier this year called Solid Bio. The day of their IPO, the FDA put them on clinical hold. And so they had to redo it the following day at a lower price. About a month later, they came out and said that the FDA had put both of their programs on clinical hold and the stock fell. But since the stock fell, it's basically doubled. There's a lot of interest in the gene editing and gene therapy space, and I don't see that going away.
What symbol is that?
It's SLDB.
SLDB. Okay, real quick, let's get to a couple stock picks here. Last time you were on, boy, you gave us something, and your timing couldn't have been better. I think it was a lower price stock. I know some people in the chat bought it. Spencer helped me out with it. Do you remember?
No, I really don't remember, honestly.
Oh, I should have looked this up.
I remember. And it's funny that you say that because timing is one of those things that really impacts returns, but I have absolutely I couldn't have, you're right. I got lucky.
What was that?
Timing is, so the two companies were Catalyst Bio, CBIO, so Charlie Bravo Indigo Omega.
Okay.
And HTG Molecular, Hector, Thomas, Gary, Mary.
That was the one.
That one blasted off. I actually bought
Yeah.
that, Dennis Dicker. I actually bought that because you were talking bullish about it. I remember this, and I actually bought it after that. And it went straight up from 350 to like 550 there. Like in 5 days, it was like, wow, this guy's awesome.
Well, I appreciate it, Spencer. And I appreciate, all of this going on. The fact is that they reported earnings last night. And pardon me for 1 second. They reported earnings last night, and the street is really selling them off. And so from a short-term perspective, I think that that's definitely overblown. And the reason I think that is because this is a diagnostics company, a revenue-generating company. They have a platform that's going to be used by every large cancer company to diagnose patients quickly to determine whether their drug will be effective or not. And so if you look at this on a quarterly, basis, it's kind of like a myopic view. So the stock might be sold off right now, but very, very confident on this company. More importantly, are you guys looking for a couple of picks?
Yeah, sure. Yeah. Go ahead. We got just about a minute left. Give us a couple picks.
Sure. So top pick has to still be Catalyst Bio. It's an absolutely exceptional company, CBIO. We think that they represents probably a 3x upside if their data is positive in July, run by an all-star management team. The entire platform is unbelievable. Their data set has been simply extraordinary. Their CEO, CFO, CMO, and everybody that works there are terrific, exceptional people, and their science is amazing. That's got to be number one. Number two pick has to be a company called Crystal, KRYS. What they do is a gene therapy product. It's topically applied, and the two founders of this company were the two people that created Vyvanse, which is the extended release amphetamine formulation that Shire basically used to get acquired last month. It's
What's
a $2.2 billion drug.
What's the symbol?
KRYS.
KRYS.
Yeah, KRYS. Now, it's a very, very illiquid stock. It trades by appointment. Their data is coming in the third quarter. They have a massive patent library to use their gene therapy vector, and we couldn't be more bullish on this stock. But Catalyst Bio still has to be number one. It's an exceptional company, and that won't change until at least July.
Do you follow CRISPR Therapeutics or EDIT, which is Editas Medicine? You follow either one of those?
I follow both of them, and I follow Intellia, which is the third CRISPR company. The bottom line is that they were featured on 60 Minutes. A lot of retail interest has been drummed up, but the problem is that none of them have entered man yet. So they're at least 10 years away from any potential FDA approval, and they are tens of billions of dollars away. So whether the stocks perform well, they'll go up and down over the next 10 years. Bottom line, too early for me. There are other places I can park my capital, right? But they are very exciting.
All right. Jonathan Wexler, he is with LifeSci Advisors. He is knows his stuff when it comes to the space. He's a managing director there. Jonathan, thank you so much for your time, and have a good weekend.
Gentlemen, thank you so much as well. Have a great weekend.
All right. Just about done with the show for the week, 8:59. Dennis, are there any imbalances that we missed or anything else you guys wanted to hit on before we actually bring on a addendum to the show?
No, just imbalances I can give you quickly. ExxonMobil, 84,000 to buy. It is ex-dividend here today for 82 cents. So you got to adjust your close on ExxonMobil. Closed 81. I got to grab the number for you. Closed 81.72. The adjusted close is 80.90. So ExxonMobil actually trading up 30 cents here in the pre-market, not trading down if you didn't do the adjustment for your dividend. AT&T, 133,000 to buy. Verizon is small and buy and bounce. That's going to grow. It's obviously got the upgrade there today, so that's going to drive it. It's only 6,000 to buy right now. Bank of America, 104,000 to sell. Wells Fargo, 48,000 to buy. So those two are opposite directions. Those are always interesting. GE, which continues to show a little bit of life here, 92,000 to buy here this morning. So small buy and balance. We didn't talk about Macy's. Macy's got annihilated there yesterday. Today it's Kohl's. Kohl's catching a downgrade there at Credit Suisse. They are downgrading the stock, and it is trading down $2 in the pre-market. So looks like it could be a little bit more pain for the retailers here this morning.
All right, that's going to be it. Dennis, we're going to let you run. I'm going to stay on now real quickly for a few minutes with one of my colleagues I've been thinking, Nicole Lapointe. She's been on the show a few times now. She is our director of events, and I'm having her on specifically because next week is the Benzinga Global FinTech Awards. It is May 15th and 16th. That is Tuesday and Wednesday in New York City. Pulling up the homepage now on the screen. Nicole, thanks for coming on with me today. I want to have you on real quick just to tell us, holy cow, who's going to be at this event?
Yeah, we have some great speakers. The global head of financial services for Facebook, the CEO of Foursquare, the global head of enterprise strategies for Amazon, and the CTO of IBM, just to name a few.
The seat, and that's the IBM Watson guy, right?
Yeah,
that's Tom Mack. Okay,
Mm-hmm.
and also every major brokerage will have their heads there, right? We're gonna
Yes.
have TD Ameritrade, Fidelity, Schwab,
Yep.
TradeStation, and who am I missing? E-Trade. There any more than I'm missing? No, those are the big boys. Are we gonna have any? Gosh, and we have people from the payment space, from the brokerage space,
Yep.
from the financial advisory space, from the quant space. Is there anyone else that?
Well, and you don't want to forget the startups and the award
How
ceremony.
can I forget the startups and the award ceremony? What am I
Yeah.
thinking?
Remember, 50% business, 50% party.
Business in the front, party in the back. It's like a mullet up in here. All right. Can you give us a discount code for or a code on how to get a ticket?
Yeah, if you just go to bzawards.com,
Okay.
there is a button right on the homepage that says get your ticket. And if you punch in the promo code PMP, you will be able to get $200 off the general admission.
Okay, and the event starts like 9:30, 10,
11
on Tuesday,
and 9 on Wednesday.
11 on Tuesday. It goes like all day, all night, as late as we want, and then Tuesday you said, or Wednesday you said 9, and then it goes until 4, right? 4
Yep,
on
9
Wednesday.
to 4.
So
Yep.
I will be there. Joel will be there.
Again, just a reminder, it's at New World Stages in Midtown near Hell's
Probably
Kitchen.
should mention that, right?
Yeah, over 800 people over 2 days. So.
Come hang out with us. We're 800 people, really?
Yeah.
Oh man. Oh, okay. So I will be next week's shows will be interesting. Joel and I are going to be in New York for several days, so we're gonna do the show. It'll be interesting to see how that works out. But we're gonna do the show live from the venue Tuesday and Wednesday. We're also going to be on the TD Ameritrade network. They're going to be broadcasting live from the venue. So Joel and I will both be on that at various points on Tuesday and Wednesday. So come hang out with us again. bzawards.com. Nicole Lapointe, she is the person in charge of this entire endeavor. Nicole, thanks so much for stopping by.
Yeah, thanks for having me.
All right. Hope you guys can attend. It's going to be a blast. This is the 4th year we've now done this event in New York City. It is we've got a few events on the calendar, and this is kind of this is my personal favorite. It's the one we've been doing for the longest. So again, BenzingaFinTechAwards.com. The website is up on the screen right now. Hope you guys had a good morning and you had a good week. Thanks to all of our guests who joined us all week, specifically today, the Reverend Emmanuel Lemelson and Jonathan Wexler from LifeSci Advisors. Thanks to all of you who joined us in our chats on YouTube and premarket.benzinga.com. On that note, on the chat, I want to just mention something that I've assumed everyone knew for a long time, and apparently that was not the case. But the chat does not end when the show ends. The chat is going all day, more or less. There's people, I saw someone in the chat yesterday that I mentioned that they had always left the chat when the show was over, but there are people still in there talking and talking the markets and trading ideas all day. So just because the show is over does not mean the chat ends. The chat is still going. People are still in there all day. So don't leave that necessarily just because Joel, Dennis, and I go off the air. So that was my spiel about that. Thanks to everyone who listened today. Hope you all have a good weekend. We'll be back with you on Monday. Have a good one.